Okay, now I'm going to look at a illustrative question which is going to illustrate how ethics is examined. As mentioned in previous recordings, ethics is frequently examined in using a scenario. You can get a very simple question, which is, what are the 5 principles of ethics? 5 marks. And if you're lucky enough to get that question, you simply regurgitate the 5 P-I-C-C-O. Pico, as I call it, Dr. Pico, rather cutely. P-I-C-C-O. This question, called North Sea, which is taken from the pilot paper in 2006, is a classic based on scenario analysis. So rather than being simply asked to regurgitate the 5 ethical concepts of Dr. Pico, we are going to look at the scenario and identify any breaches of those ethical guidelines. It is a real past examination question, so let's start where you should start, which is not with the scenario itself, but with the requirement, which I believe is here on page 5. There it is. So, required. Identify and explain the relevance of and any factors which may threaten the independence of Dark & Co.'s audit of North Sea's financial statements for the year ended 31st December in 2007. Briefly explain how each threat should be managed. 10 marks. It's a tricky one, this, because the first thing you've got to do is work out where your 10 marks are coming from. Well, let's have a look again. Identify and explain the relevance of any factors which may threaten the independence of Dark & Co. So it's a question about independence, right? So you've got to identify any factors that threaten the independence of this entity, Dark & Co, I believe it's called. Yeah, Dark & Co.'s audit of North Sea. So we're Dark & Co, they're called North Sea, we're doing their audit, and we're being asked, are there any issues which make us dependent upon North Sea rather than independent from North Sea? That's the first thing. Oh, that's the first thing, you see. Briefly explain how each threat should be managed. That's the second thing. So you're being asked 2 things. You're being asked for weaknesses as regards independence, weaknesses and recommendations. Weaknesses and recommendations. If you are asked for weaknesses and recommendations, then it's one idea over here on the left for weaknesses, and one idea over here on the right for recommendations. In which case it's 1 and 1, and therefore that gives 2 for each line. If it's 2 for each line, 10 marks, that means you need 5 lines. You need 5 weaknesses. So we've got to find 5 weaknesses. Now that's my plan. I've been asked to do this as like a mini video rather than a formal answer to this question. Okay, so I'm going to flick through the scenario and you'll see how big the scenario is, and then we're going to pick out 5 weaknesses as regards independence, and we're going to identify what recommendations should be made. And the answer in the examination that you would produce would be tabular. So it would be weakness, recommendation, weakness, recommendation. Keeping things nice and simple, that's how it works. You are the audit manager in the audit firm of Dark & Co. One of your audit clients is North Sea, a company specialising in the manufacture and supply of sporting equipment. North Sea have been an audit client for 5 years, and you've been audit manager for the past 3 years, while the audit partner has remained unchanged. You're now planning the audit for the year ended 31st December 2007. Following an initial meeting with the directors of North Sea, you've obtained the following information. Did you see it? Did you see the weakness? The problem there is 5 years. Now, it's argued that the longer you spend doing an audit, the more familiar you get with the characters on the other side. The more familiar you get with the directors, the more familiar you get with the employees. The more friendly you get, the less independent. So we have a problem called over-familiarity. Now, the ACCA recommend that over-familiarity tends to creep in around about after the 5th year. If you have a look at the scenario, did you notice there was 3 and 5? Read it again. North Sea have been an audit client for 5 years, and you've been the audit manager for the past 3 years, while the audit partner has remained unchanged. Now, the truth of the matter is 3 years, you're at your best. There's another problem called under-familiarity, and that's what you get in your first year of audit. You're not really quite sure what you're doing, so there's a reduction in the quality of your audit because of under-familiarity. You can't really do anything about it. You have to have a first year. But you're at your best when you're in your third year. So this is perfect, perfect familiarity, as they call it. Over-familiarity tends to creep in, the ACCA reckon, in year 6, 7, 8, 9, 10. So once you get to the 6th year, you should move away from that audit, start a new audit, and get someone else in to do the job. Now, this guy, the audit partner, is actually in his 5th year. Now, the way that you answer this is entirely up to you. Clearly, the problem is familiarity. There is a danger of familiarity as regards the audit partner, and therefore they may fail to see any problems that are within that client. So the problem is over-familiarity, and the recommendation, well, that's up to you. Perhaps you might think about saying he needs to resign next year. Perhaps you might feel like saying he needs to resign this year. There's no black or white here, as long as you make a reasonable recommendation. Now, the normal process when it comes to resignation of an audit partner is the firm doesn't resign, so that's Dark & Co., isn't it? Dark & Co. don't resign, but one partner swaps with another partner, right? One partner swaps with another partner. And because of this process of swapping partners every 5 years, they call that auditor rotation. So the recommendation is auditor rotation. Okay, next one. North Sea is attempting to attain a listing on a recognised stock exchange. The directors have established an audit committee as required by the corporate governance regulations, although no further action has been taken in this respect. Information on the listing is not yet public. So you could pick up various issues from that, but one of them might be that you've identified a confidentiality issue. Frankly, though, the question was asking you about independence and not confidentiality so much. So let's see if we can find an independence issue further down. 2. You've been asked to continue to prepare the company's financial statements as in previous years. Oh, that's the one. That's the independence issue. Believe it or not, the ACCA will allow you to prepare FS and then audit those FS. I think it's wrong, but they do allow it, providing the company is a private company. This company is a private company. However, it's going to become listed. And when it does become listed, then we can't do the audit any longer. We just can't. Really, to be honest, we shouldn't be doing the audit and preparation now, because you can't be independent from yourself. But definitely we can't do it when they become listed. So the weakness is preparation of FS for a company that will become listed, followed by the audit of those FS. And the recommendation is we should help the company to find their own financial accountant, because we won't be able to do the preparation next year. So the recommendation would be help them to find an accountant. That's that. As the company's auditors, North Sea would like you and the audit partner to attend an evening reception in a hotel, where North Sea will present their listing arrangements to banks and existing shareholders. Nice, easy one, this one. They want us to stand amongst the directors and present on the proposed listing. Clearly, if we present with the directors, we will look part of the management team. If we appear to be part of the management team, then we will have appeared to have lost our independence. Even if we actually have our independence, we will appear to have lost our independence, and therefore that's a no-go. So the weakness is, this one's got an easy recommendation. The weakness is we appear to be part of the management team, and the recommendation is we say, no thanks, we cannot go to the reception. Next one. North Sea has indicated that the fee for taxation services rendered in the year to the 31st December 2005 will be paid as soon as the taxation authorities have agreed the company's tax liability. You've been advising North Sea regarding the legality of certain items as allowable for taxation purposes, and the taxation authority is disputing these items. Frankly, I think the first three that I've talked through there are relatively easy. You would expect one of these points to be difficult, and this one really is very, very difficult. It's even difficult to work out what's going on in paragraph 4, I think. North Sea has indicated that the fee for taxation services rendered for the year to 2005, bearing in mind we're in 2007, will be paid as soon as the taxation authorities have agreed to the company's taxation liability. I think what I'm going to do is just jump in. The ACCA have this idea that you can't simply let the client run up a bill, run up an account. You have to have a commercial relationship between yourself as auditor and the client company. Otherwise, you're seen as being too friendly. They call them overdue fees. When you have overdue fees, you must press for payment. So the weakness is it appears that there's overdue fees that we are not pressing for payment, and the recommendation is press for payment. There are other ways of discussing that, though, but there are so many ways of discussing it, I think I'll just leave it open. And the final one, well, that's back to being quite easy. Finally, you've just acquired about 5% of North Sea's share capital as an inheritance on the death of a distant relative. Now, do you remember we are the manager. I am the manager in this story, not the partner. So as manager, can I keep my 5%? Can I be both shareholder and also auditor? No, that would be a breach of independence. If I keep the shares and I find a fraud, I'd be tempted to suppress the fraud in order to keep my share price up, right? So no, you can't be a shareholder auditor. Just can't. So the weakness is we have a shareholder auditor who might be tempted to suppress a fraud, and the recommendation is either I've got to resign from this particular job or sell my shares. Probably both, to be honest with you. Okay, there you go. That's how that question would be answered.